to the next slide?
Yes.
Okay, perfect. So our agenda for today, sorry, the pop-up came up. Our agenda today will be going over the purpose of the first-time home buyer program, the program requirements, the applicant processing, the applicant review criteria. And again, if we do have time allotted, this is just going to be a 30-minute. So at 9:30, we will be stopping. But if there is still time available for you to ask questions, we will take those questions at that time. Chris, if you wouldn't mind going to the next slide, we'll go over the purpose of the program. Oh, sorry, we already went over the introductions. Okay, perfect. So the intent of these dollars that are administered by the U.S. Department of Housing and Urban Development, which will also be funded directly by the city's entitlement home dollars. The intent is to provide down payment assistance to eligible low-income households so as to render their home affordable. The intent is also to lower the required primary loan amount, thereby lowering their monthly housing costs to that borrower, or in this case, the participant of the program. We also are trying to facilitate the entry for the applicant into the housing market. Next slide, we will start going into the program requirements. So with regard to the applicant or the household's income, we want to make sure that the household income does not exceed the 80% area median income for Los Angeles County. The city will be determining income eligibility on their side based off of the Part 5 method, which is cited at 24 Code of Federal Regulation 5.609. It's very important to note that the household income that will be taken into account is going to be the income of all household members 18 years of age and over, as well as any of their contributory value to income for assets held. There will be a passbook rate that will be applied to their assets. And lastly, all supporting income documentation as well as asset documentation will be required to be submitted with their application for the city to review. That documentation will later be compared to the loan documents obtained by the lenders for consistency purposes. The next slide, we will go into the property requirements. So the property that is ultimately acquired, it must be located within the corporate city limits of city of Lancaster. I believe there may be little pockets of unincorporated areas. Those would not be eligible. It must conform to the maximum occupancy of bedrooms ×2 + 1. A simple example of this would be a household of 5. We would need a minimum of 2 bedrooms, right, in order to house those. A 1-bedroom would not be an eligible purchase. There are some other exceptions to those, but I won't go too far into detail on those ones. If the property is constructed prior to 1978, please note that the lead-based paint requirements will apply. The city will conduct a lead-based paint inspection, and that report will be generated, identifying any potential remediation actions that would have to be addressed by the seller. Currently, the homeownership value limits are currently set at $570, meaning the participant cannot purchase a home exceeding $570. Note that this amount may change within the coming weeks. They are typically update around end of May, early part of June. So just be mindful of that. The property must also be inspected to ensure conformance with the housing quality standards. So the city will complete an inspection to make sure that all of the HQS requirements are being met. If not, a list of corrections will be identified on the report for the seller to address. Continuing on with the property requirements, the eligible properties the city is allowing for new and existing properties, but they must be designed as a residential unit for 1 household. This will include single-family homes, condominiums, townhomes, manufactured housing on permanent foundation with permanent hookups. Please note that properties that are currently set up as rentals are not eligible unless the current renter is the purchaser, or in this case, the participant under the program. I believe this is going to be the last slide on the property requirements. So properties which are not owner occupied are allowable. However, so long as it is verified that that property has been vacant for at least 90 days prior to the offer to purchase. And also note, if the property is located in a special flood hazard area, that property must obtain and maintain flood insurance for the duration of the city loan. Next slide, we will go into the city loan. This is probably one of the more important slides for this presentation. The city loan will be based on the lower of the following. So first option, the amount required to maintain a 33% front end ratio. This is what we're calling the financing gap. Is also to be mindful that the program requirements call for a maximum back end ratio of 42%. Again, that's the most that we're calling for this program. We know that some of the lenders may go above that, so just be very mindful of that back end ratio of 42%. The second option is 40% of the sales price of the property, or lastly, the absolute maximum is 150. Please note that closing costs are considered here, so long as the city determines those to be in compliance with this maximum, with this formula for determining the financing. So the eligible, sorry, Chris, if you could just go back to that previous, yeah. So just the eligible costs that cannot be paid by the borrower may be funded, provided that the maximum program loan amount is not exceeded. Next slide. So here we're going to go into the city loan terms. They will include they will be secured by a second deed of trust. They are 0% interest bearing. They are deferred payments until the earlier of the sale of the property, transfer of the property, or default of the program requirements, loan documents, recorded documents. Also, the loan may be prepaid at any time in whole or in part. It also note that the participant will be required to execute the following documents on the city side. It'll be a home participation agreement, identifying, the execution dates, the amounts, the promissory note, the deed of trust, and recorded affordable housing restriction. Next, we're going to go into the required affordability and loan forgiveness. So I know we indicated that there will be a recorded affordable housing restriction on here. The affordability period will be 15 years for the city's loan. Please note that there is a forgiveness component in this program, and it will be at a rate of 10% per fully completed year, commencing on the 6th anniversary date of the promissory note through the 15th anniversary date of the promissory note date. Again, provided that no condition or conditions exist that would cause acceleration of payment as defined in the promissory note. So ideally, if they get through year 6, 10% of that loan amount will fall off. They get through the 7th anniversary, another 10%. So ideally, by the end of that 15-year affordability period, if there are no causes for acceleration of payment, then the entire loan, in theory, would be forgiven at that point. We're going to go next into the applicant processing. So here we're going to go into the different functions, one by the city, by the primary lender, and then for the applicant. So the city functions here are to review the applicant's application and supporting documentation in order to determine eligibility. So here they're going to be looking at their income, their household composition, demographic information, things of that nature. If the city deems them to be eligible, the city will provide a loan reservation determination. Upon tentative lender loan approval, The city will prepare documentation package for the participants' transmission to the selected realtor. Again, upon selection of property, the city will complete an environmental review and then also perform property records review, as well as complete those on-site inspections. Again, if the property is built prior to 1978, that inspection will also include the lead-based paint inspection. Next slide, of course, they will complete the lead-based paint testing if applicable. If issues and required corrections are identified, so if any deficiencies are identified, they would again need to be corrected, whether it's regards to the housing quality standards or the lead-based paint requirements, and the city will have to go back out to re-inspect it to make sure all deficiencies were rectified. Upon receipt of a complete lender loan file, so this is where the lenders will have to submit their entire loan file to the city will review for consistency with the participation documents. So those bank statements, pay stubs, and things that the city had received during the application process, they will compare those with the loan files, and then perform a final underwriting for the city loan. They will issue a determination of the loan approval and level of funding or denial. If approved, the city will then prepare their loan documents and transmit those documents to escrow as part of the closing process. Next, we will go for the primary lender function. The primary lender, the intent is to provide a preliminary primary loan commitment or denial determination in conformance with the city's procedures. It will notify the city of their determination and preliminary loan amount, will complete the primary loan underwriting for applicant and the property. They will submit their complete lender loan file and certification of applicant eligibility to the city for the city's review and final approval. And if approved, then the primary lender will prepare their loan documents for transmittal to escrow for closeout. The applicant, they will be responsible for submitting their application as well as supporting documentation to the city for the city's review. Again, all these 4 bullet points here will be conditional based off of city approval. They will select a lender. They will then, upon receipt of the city loan reservation, will select a realtor. They then will select their property and make their offer on that property. They will notify the city and the primary lender, notify city of primary lender determination and preliminary loan amount. And then in the next slide for applicant functions, they will submit their residential purchase agreement and escrow instructions to the primary lender and the city so that they can complete their documents. And if approved, they will execute the city and the primary lender loan documents. The next slide kind of goes off of what we would call like a best case scenario for the duration from start to finish. For application review phase, we're approximating about 7 to 10 days. Now, please note, I mentioned this is a best case scenario. These timeframes are all conditioned on each entity's responsiveness, right? The applicant, the lender, the realtors, and the city's responsiveness in a timely manner. So again, the application review phase, approximately 7 to 10 days. The primary lender commitment, about 10 to 14 days. Property selection, 7 to 30 days. Property review and inspection, 7 to 14 days. City loan approval, 7 to 14 days, and escrow closing, 7 to 10 days. Please also be mindful that these days, they kind of run they run concurrently, right? So the entire duration may be a little bit shorter as there may be some overlap for each of these processes with one of the other processes. Next slide. We're getting closer to the end. This is the last section. We're looking at the applicant review criteria. So the main things that are going to be taken into account when reviewing the application for the applicant requirements is, again, does the household income, is it meet or fall below the 80% area median income for Los Angeles County? All household members, this is very important, all household members must be seasoned within the household for a minimum period of 1 year. At times we have applicants who maybe don't income qualify and then magically a household member appears. We're indicating under this program that all household members have to be seasoned with the household for a minimum of 1 year. They must meet the home definition of a first-time home buyer. They must meet credit worthiness requirements of the primary lender. And they must have what we are calling sufficient seasoned assets to provide a minimum down payment of 3% of the acquisition costs and closing costs not addressed by the city. So that's very important, seasoned assets. Additional applicant requirements. So liquid and convertible assets cannot exceed 12 months total monthly housing costs, 12 months household expenses. Any amount that exceeds these two scenarios shall be contributed towards the participant's down payment and estimated closing costs. So if they have a large amount of liquid or convertible assets outside of this, again, we're looking for that to be contributed towards the down payment to make their home more affordable for them. They must utilize the property as their primary residence for the duration of the affordable housing restriction. Again, the affordability period is 15 years. This primary residence will be monitored by the city on an annual basis, and those participants will be required to provide supporting documentation to justify that property as being utilized as their primary residence. In addition, prior to approval and everything, they must complete an 8-hour of in-class HUD approved first-time homebuyer education prior to loan funding. That concludes the presentation. Again, we do have a hard stop at about 9:30 because we need to jump to the next presentation. Right now, Chris, do we have access to the chat box? If not, where maybe people have been able to put questions. If not, we do have a couple of minutes to answer any questions that anybody may have. Perhaps if people want to like raise their hand in the Zoom options.
Yeah, unfortunately, we weren't able to get the chat function working just yet. Hopefully before the next meeting.
Okay.
I don't see that on here as of yet.
Okay. Does anybody have any question? I'm not sure if on Zoom you have the raise your hand option.
I got a question if you can hear me.
Go ahead, Robert.
We have
Yeah,
Robert.
thank you. So quick question about closing costs and financing it. I understand we got to keep the housing ratio at 33%, which is going to potentially limit what they can borrow. But if you finance closing costs, how do you factor in how much we can actually finance for closing costs, since we're limited by only getting enough money to keep their housing ratio below 33%?
Perhaps I'm not, can you say that again? I'm not.
Yeah,
And
so
this may be one of those questions that we'll probably want to answer in the FAQ.
sure.
So
Let me
that
make sure I get
everybody's
the
provided the written question, and then we can provide the written response on that.
okay. Yeah, you want me to rephrase my question or
Yes, just so we can jot it down
Yeah.
on our end. We have staff right now who is tracking the question.
okay? Let me make sure I've got the first part right. There is financing of closing costs. That's possible with this program, right?
Correct.
Okay, so
Correct.
what's also true is we can only get assistance up to the amount that would bring their housing ratio below 33%, right?
Correct. Front end.
Okay, so I'm trying to reconcile those two things, because if I need to borrow $100,000 to bring their housing ratio, and if I borrow more, their housing ratio goes below 33%, it sounds like they don't want to go, you only want to give them what they can use. So how do we determine if and how much closing costs they can finance if that money, say $10,000 for closing costs, if it went towards the down payment, now their housing ratio is 30%, which it sounds like that's not the intention of this program. Am I making sense how I explain that?
I'm still trying to track it. I'm trying to follow the question.
Okay.
I apologize. Yeah, I
Is
think
anybody else on the call that I'm making sense to? Does the way I'm asking this make sense? Anybody else want to chime in?
Yeah. Chime in on that?
Yeah, it makes sense. I mean, also I want to know if they allowed any buy down on the rate as well? Could that be
You know,
financed on the closing cost?
no buy down is allowable, at least yet, under the program guidelines.
Okay.
for now.
I guess clarity on how much closing costs we can finance, since we're only, like, if there was a hard, you can grab 150 up to 40% down, that's easy. But because once you hit 33% housing ratio, you no longer get additional funds, even if that means you only needed $80,000. So my question is, if I'm only allowed to have enough money to bring the housing ratio to 33%, but I also want to finance closing costs, how do we determine if and how much we can use to do that?
Maybe what I'm thinking is, yeah, I'm thinking this one's going to be better for the FAQs, because right off the top of my head, I don't know if the three options
Yeah.
are being, I'm trying to find that on the slide. And again, I'm trying to be mindful that I can't share that right here.
No worries.
Let me see, because we're looking at the lower of the options being the 33% front end ratio, while also tracking the 42 back end, 40% of the sales price, the maximum loan amount of 150. So let's say first option is the 33, and that somehow mathematically comes out to 100,000. 40% is 120, maximum is 150, right? So the 33%.
Sure.
The 100%, the 100,000 would be the lesser. So we would be going with that. And then eligible closing costs that cannot be paid by the borrower, that would also be included with the loan amount that the city would be providing. So if that ended up, I don't know what the
Okay.
average closing
So get
costs
your
are.
housing ratio to 33%, and then they'll also cover closing costs
Correct.
up to 40% down. All right.
Well,
So
up to the maximum program
the
loan.
lesser of all those, right?
So if you're like if 30, let's say 33 is the lesser of all these three, but you're at 148, we're only going to be able to do the balance of 150 minus 148.
Mhm. Is there a list of eligible closing costs? And if someone else asked if they can do buy downs, that's not part of eligible closing
Not
costs.
part of eligible closing costs. I would say that one would be more of an FAQ question. So
Okay.
that we can get that list down, because I don't believe we have that broken down
that'd be great.
specifically into the program guidelines. Did I
Cool.
answer your initial question?
Yeah, I think I got it clear. I'll let anybody else jump on for the next few minutes.
Okay.
Thank you for your time.
And we do have about just 3 minutes left. Again, I apologize, but we have a hard stop at 9:30.
Hey, this is Joseph Sala. I got a question. I know, does the city require the buyer to have escrow account, or is not necessary when they're closing?
Can you repeat that question?
Would you require them to have an escrow account?
The applicant?
Yes. Because we can waive escrow, so they don't need to pay property tax and homeowner insurance upfront or collect for it upfront, and that helps with reducing the closing cost.
I believe requiring escrow in this, but I would say that's gonna be an FAQ question.
Okay.
Yeah, sorry about that.
We do
require escrow.
I'm sorry, Bob, can you say that again, Bob?
We do require escrow. It's a
Yeah.
portion of the program guidelines.
Yeah, okay, perfect. Did that answer the previous question?
Yes, sir. Okay, so we do require them to have an open escrow account, correct?
Correct.
Okay. Thank you.
We probably have like 1 minute left. I don't know if it's a quick question. Sorry, it sounds like my voice is going in and out. I would say maybe just one more question.
Go ahead.
Yes, my name is Gurgen Mikhaili, and I'm from Bank of America. I'm a credit solution advisor too. So my question is how we can communicate with City of Lancaster to get in details or any questions we will have, because I believe the presentation was nice, but lots of questions are there. I mean, and it's going to increase. So how we can be in touch, and what's the best way to communicate with City of Lancaster? So because we have one number and sometimes it's not.
Perfect. We have that's a perfect question. Chris, would you mind pulling up the presentation one more time to the second to the last slide, just so that will provide everyone here on the call with the city's contact information and email addresses. And that way, if you guys want to grab your phone, take a picture. Second to last, one more up. There you go. So we'll probably leave it on screen for about a minute. If everybody wants to take a take a picture of that. And again, if you could please direct all questions to Lisa Anderson. So that's Al Anderson at cityoflancasterca.gov. We will compile those questions that we didn't have an opportunity to answer today, type it up, provide written responses to it. If we're able to direct some of those answers to the program guidelines that are contained on the city's website, we will kind of direct those responses there, maybe reference a page section. That way everybody's able to go to those program guidelines and see that. Any ones that we cannot directly point to the program guidelines, we will provide the more detailed written response to. And then we will make that FAQ available on the city's website as well. And so I hate to cut the meeting, but we do have to jump on to the next one. We appreciate everybody